If I had to start a business from scratch in 2026, there are 3 things I'd focus on from day one. And these aren't complicated. In fact, they're the exact same 3 steps I've seen the most successful small business owners follow over the last 13 years working with hundreds of clients. My name's Ben Elliott. I'm an accountant and business owner, and I've taken our business from 500K to 5 million in revenue. And the reason I can go on holiday for 2 weeks without checking my emails, or the reason our team runs things without me constantly being involved, comes down to getting these 3 things right early on. I'm going to walk you through these 3 steps. You'll see exactly what I'd do if I was starting fresh in 2026, what systems I put in place, and how I'd think about structure so I'm keeping more of what I earn as the business grows. Let's get into it. Step 1 is get financially organized. This is the foundation everything else is built on. Think of it like building a house. You've got to lay the foundation before you can build anything on top of it. And getting financially organized just means setting up the right systems so you always know where you stand. And it starts with bookkeeping. I know it sounds super boring, but this is where it all begins. You want to be using something like Xero for your bookkeeping and use it properly. That means 3 things: customer invoices, supplier bills, and payroll. Each of those needs a separate process. Let me give you an example with customer invoices. Say you've got a business doing 1 million in revenue and you're making 15% net profit after you pay yourself a wage. That's 150,000 in profit. But we find that your invoicing process is missing things. Missed hours on a job, missed materials, or maybe materials that just aren't priced correctly. If we tighten up on your invoicing process and capture an extra 5% in revenue, that becomes 1.05 million in revenue, and now your profit is 200,000. That's a 33% increase in profit just by getting sharper on your invoicing. The second part to this is getting paid. It's no good doing the work and invoicing if a customer's take 60 days to pay you. If you can reduce that payment time from 60 days down to 15 days, your cash balance improves by 125,000. That's an extra 125,000 sitting in your bank account. So in this example, we've improved profit by 50,000 and improved your cash balance by 125,000 just by getting very financially organized around our invoicing and collections. Next is supplier bills. You need a system to capture, approve, and pay supplier invoices. If you're small and just starting out, the key here is making sure you capture all your expenses so you're not missing any tax deductions. If you're more established, it's about expense management and cost control. You don't want to be paying invoices you shouldn't be paying. Too often, businesses end up paying bogus invoices issued by scammers or even fake ATO tax bills, all because they didn't have a good system for bill payment. And then there's payroll. The big mistake I see here is super. Super has a deadline every quarter. And if you miss that deadline, the payment is not tax deductible. I had a client who missed the January super payment because the person who usually pays it was away on holiday. It cost them an extra $20,000 in tax that year because they couldn't claim that late payment as a deduction. Now we get most of our clients to pay super every pay run instead of quarterly. It actually reduces the workload and eliminates the risk of late payment. Plus, from 1 July 2026, it'll be mandatory to pay super every pay run anyway. The last part about getting financially organized is having a basic budget and cash flow. At a minimum, you should know what your expenses will be every month, what you need from the business to fund your life, and what revenue you need to cover everything. Once you've got this sorted, you've laid the foundation. Now things start to get interesting. Step 2 is focus on the numbers and the numbers improve. Imagine watching your favorite sport and you look up at the scoreboard, but there is no scoreboard. They're just not keeping score. Kind of defeats the purpose, right? It's more like a practice match. And yet, this is how so many small business owners operate. No scoreboard, no tracking, just going through the motions. A business is a game of numbers. It's how we measure results. Revenue, profit, cash, but also the drivers of those numbers. In sports, they don't just track the score. They track every player's statistics, every metric that predicts the scoreboard. It's the same in business. You need to track the drivers of your revenue, the drivers of profit and of cash. And here's what I know. When we track those numbers, they improve. It's like magic. It's the same way an athlete tracks their training times. Just by measuring, they naturally start taking actions to improve. If you count your steps each day, you end up walking more. If you track weights at the gym, you end up lifting more. It's the exact same in business. You track your numbers, you put some focus on what can be improved, you take action, and you remeasure your results, and you do this every month and every quarter, again and again and again. And when you do, the numbers improve. I've seen it happen over and over again with my own clients and also in my own business. We set targets for the business. How much profit do we want to make? How much revenue and how much cash? And then we track our progress. And when we do, we naturally start looking at ways to improve those numbers. This will lead you to making more money in your business. And I can say that with confidence because I've just seen it happen so many times. Step 3 is reinvest your profits. Once you're making more profit, the question becomes, well, what do you do with it? This is where you start building something that actually gives you freedom. The goal here is to hire people to do the things you either shouldn't be doing or don't want to do. There are 3 main parts to this: admin and finance, operations, and sales and marketing. Ultimately, you need somebody in charge of each of these areas. You might be that person right now, so we want to look at who we need to hire or develop internally to take over that role. You start with admin first. You hire a personal assistant or a business manager. You outsource your finance function to someone like me. And now you're out of admin. Next is operations. This is more challenging, especially if you're currently very involved in operations. But you have to look at how to replace yourself. In my business, I have client managers who each have a group of clients they're responsible for. I'm not completely out of the work myself. I still review work and meet with plenty of clients, but I'm not doing the day-to-day work anymore. The last area here is sales and marketing. This is often the last area business owners withdraw from because they tend to be good at it. They're passionate. They know and believe in their product. If you're able to remove yourself from admin and operations, you might enjoy the sales and marketing side and choose to take responsibility for that role. But you don't need to do it all yourself. You can hire salespeople, you can outsource marketing to an agency or hire internally. That then leaves you, the owner, as the CEO. And if you remove yourself from admin, operations, and sales and marketing, you can actually focus on the CEO role and do it properly. Now, this is a long process. You might not want to be completely out of the business, but most business owners do want to cut down their time. And it starts with reinvesting your profits back into the business and building the right team. The good thing is that the tax system rewards you for reinvesting your profits. If you have a company and you earn profit, the tax rate is 25%. If you take that profit out of the business, the tax rate peaks at 47%. By keeping the profit in the business, you're saving up to 22% in tax. Now, you don't necessarily need to invest everything back into the business. As business owners, we should all be building up some investments outside of the business. I'm the same as most of you. The majority of what I have is invested in the business. So if we're making money, it's a good idea to start building something up outside the business in case something goes wrong. To save tax along the way, we normally use an investment company for this. We call this a bucket company sometimes, and we don't want to invest in the trading company because that carries risks. Instead, we quarantine those investments outside the business in another company which carries no risk. That way, we avoid the 47% tax on profits and cap the tax rate at 25 or 30%. Now, the bigger picture here is building something valuable. So by getting financially organized, focusing on the numbers and reinvesting your profits, you're not just saving tax, you're building a valuable asset. So let me tie this all together and explain why I'd focus on these three things if I was starting a business in 2026. It comes down to this. The business owners who build something valuable, something that gives them real freedom, are the ones who treat their businesses like an asset from day one. And building an asset means doing those three things. You need clean, organized finances so that you can make good decisions. You need to track your numbers so you actually know if those decisions are working. And you need to reinvest your profits intelligently so the business grows and becomes less reliant on you. That's the pathway. Now, where you are in your business journey determines where you put your focus. So if you're just starting out, your priority is step 1 and partly step 2. Get financially organized, get your bookkeeping set up properly, capture all your expenses so you know you're claiming every tax deduction, and start tracking your numbers so you know what's coming in and what's going out and whether you're actually making money. At this stage, you're probably doing everything yourself, and that's normal. But the goal is to lay the foundation so that when the business starts making real profit, you're ready to grow. If you're more established, you've probably already got step 1 sorted. Your focus now shifts to step 2 and step 3. You're refining your numbers, looking for areas to improve profit, and starting to build a team so that you can step back from the day-to-day. And here's the thing. The further you go down this path, the more valuable your business becomes. A business doing 1 million revenue with 15% profit and the owner doing everything themselves might sell for 300,000. But a business doing the same revenue with 30% profit, systems in place, and a team running it might sell for 1.2 million or more. That's a $900,000 difference. And it all comes down to following these 3 steps. But honestly, if you build a business like that, you probably don't want to sell it because now it's giving you the freedom you started it for in the first place. So that's why I'd focus on these 3 things if I was starting again in 2026, because I know they work. I've lived it and I've watched hundreds of other business owners do the same thing. Now, you can't get to the end without starting at the start. Even after 13 years running my own firm, I still go back to step 1 and look for ways to improve. So wherever you are right now, just start. And if you need any help with one of these steps, book a call with us. We'll sit down with you, look at your situation, and make sure you've got the right systems and structure in place so you can build something profitable and sustainable. Links in the description below. I'll see you in the next one.